What a lot of basic bookkeepers or non-e-commerce focused bookkeepers do is they take your payouts as your income. So when they're doing the bookkeeping, let's say you earn 2K in a month, you only got 80K as a payout because obviously there's fees, refunds, and all of that stuff. They're going to take that 80K as your income, and CRA, Canada Revenue Agency, is completely going to disallow that. I have audit letters on in my file where CRA has asked for income to be reported from the Shopify portal. They need a download from the Shopify portal, from the reports, to see that.
Hello and welcome to another episode of the E-Commerce Coffee Break podcast. If you're a Canadian e-commerce seller, a big chunk of your revenue likely comes from the United States. Sounds great until you realize what it's costing you. Hidden fees, wrong setups, missing filings, these small mistakes can quietly drain thousands from your business. And the worst part, most brands don't even see it happening. So today we're breaking this down, what's going wrong, what actually matters, and how to expand into the US without creating expensive tax problems. Joining me today on the show is Salman Salat. He's a CPA and founder of SAL Accounting. He spent years at Ernst & Young and now helps Canadian sellers handle cross-border tax, US entities, and bookkeeping. Salman, welcome to the show.
Pleasure to be here. How you doing?
Let's start simple. When a Canadian brand starts selling in the United States, what's the first mistake they make?
The absolute first mistake, on day one, there's nothing as such. But what happens is that as people start to sell more and more, they don't realize that, and what happens with most Canadians is that 70 to 90% of their sales, or even higher, are coming from the US normally. And they don't realize that they're paying this fee to Shopify that they can completely avoid, just like that. And that is the 1.5% international payout fee that they get. Like for every $100 of sales, you're paying $1.50 for no reason to Shopify. And it's very easy to avoid that. I think that's the mistake people make when it doesn't bite them when they're too small, but as they start to go, like let's say 20K a month and above in sales to the US, it starts to bite hard.
Definitely 1.5%. That cuts right into your profit margin. And if you can avoid this, obviously you're better off. Now, there's more things to it. And it can become, as you said, once you're growing, it can not only cost you money, it can make your life very difficult when it comes to taxes and so on and so forth. Give me a scenario, an example on what you see, how companies are getting into these problems.
Yeah. So it's literally a case of not knowing that there's a solution out there. I mean, sellers see the fact that, okay, they're paying the whatever 2.6%, 2.8% normal fee for Shopify, right? Assuming you're on the Grow plan or the Advanced plan. But then they just see that fee, like let's say for just taking a small seller, $20,000 a month in sales, that's $300 every single month that you're paying. And people just absorb that without even realizing. And then there's others that don't even realize they're paying that fee. I remember I got on a call with somebody who's now my client. His revenue is about 20 million. Majority of that coming from the US. He paid about $300K in a year to Shopify for no reason that he could have just avoided with US LLC. And what happens is nothing that, I mean, here's the thing. Most sellers are in their 20s, maybe early 30s. They start a store and then suddenly they get explosive growth, especially from the US. And they're trying to manage fulfillment and all of that, those things, ads, ROAS, all of this stuff at such a young age. And they're not able to sort of keep on tabs with all of these things. And before you know it, you've spent thousands or maybe even hundreds of thousands sometimes on these extra fees that you could have avoided.
No, quite right. I mean, it can become very complex when it comes to taxes and companies set up. And there's not only that you're losing money through the fees, but there's also a penalty involved if you do things wrong. Can you talk me through this? What does it involve?
100%. So yeah, I break down my clients into, let's say, to keep it simple, stage 1 and stage 2. So stage 1 people are the folks that don't realize that they are charged the fee, or they don't realize there's a solution out there. Stage 2 people are when they realize there's a solution, and that's a US LLC. So they open a US LLC and they put that on the Shopify store, and now all your US sales are going to the Shopify, to the US LLC, and you're not getting charged that fee. Perfect. They've probably read somewhere online or seen some TikTok video where it says you have zero taxes to pay to the US with the US LLC. What they don't realize is that there's still filings that need to be done. And I'll give you a small example. There's a form called Form 5472. That form, just in of itself, has a $25,000 penalty every single year that it's missed. And so many Canadians don't realize that. For example, So normally the deadline for that is April 15th. Somebody opens a US LLC on December, end of like, let's say last week of December. They don't think about taxes until a year from later. But because they opened it, let's say in 2026, last week of December, the deadline is April 15th, 2027, literally 4 months into opening the LLC. And before they realize it, they miss the deadline. And now they're automatically on the hook for a year of a 25,000 penalty. It was literally yesterday, client of mine got that letter for that penalty. And be like, in their case, the good thing was that they had reached out to us in time, we filed it in time. So we fought with the IRS and it was like a 2-hour phone call. And we told them that filing is done. They could see it on their end and got the penalty waived. But there's so many people that don't realize it and they do get hit with the penalty. No store can afford $25,000.
That's true. You don't want to, you have sleepless nights. $25,000 really hurts.
Exactly.
And now, obviously, if you grow to a certain size, revenue services, no matter which country you're in, they have the habit that they want to get to your money. So if you end up getting taxed in both countries, in Canada and in the US, how does that look like?
So that is something that's commonly known as double taxation. Happens is with the US LLC, so let's say you have a US LLC and you pay $5,000 in taxes to the IRS. Now, in Canada, what happens? So let me give you a little bit of a history lesson before we get into the nitty-gritty. The US-Canada tax treaty, which is a treaty between the two countries saying that we're not going to tax each other's residents the same amount as you taxing them. So for example, if the US is taxing them, the Canada is not going to tax them on the same income and end up with double tax. That treaty was signed in 1980 in Washington. The USLC at that time was like literally, it was something that had just started. So it wasn't factored into the tax treaty at that time. And unfortunately, they've not updated the treaty to include anything for the USLC. What happens is the US treats the USLC as a flow-through entity. That means that I, as an owner of a USLC, or you, when you pay tax for the USLC, let's say $10,000, the LLC is not paying the tax. You're filing a personal tax return in the US in your name, and you're making the payment. When you report that in Canada, what you're supposed to do, or what you want to do, is take foreign tax credits. That means taking credits for the tax you pay to the foreign government, the IRS. When you show them the proof that I paid, what happens is a lot of times when you take foreign tax credits in your tax return, you'll get audited. And when the audit opens up, CRA wants, the Canada Revenue Agency wants proof that you've make this payment. Now, when you show them the proof that I paid this $10,000 for the USLC's income, because you filed a personal tax return, because that's how it's required to be done in the US, they're going to say that this payment and this tax filing is for you, not the USLC. And you can explain to them for hours long that this is how it gets taxed in the US. They're not going to take it. Even though it's been years and years, it's been decades since USLCs have been around, but they don't take that. They're like, this payment is for you, right? You could have made any other income and payment is for you. We want to see some proof that the LLC paid some tax, and there is no such proof. And they want you to tax you in the same income.
So when it comes to international business, obviously there's also international cross-border bookkeeping. And when you're basically running your business maybe from one Shopify account, that can become complicated. How does that work?
Yeah, 100%. So for example, what I do with Canadians, right, is that step one, before you get into bookkeeping, I have them own the USLC, not in their own name. I have it owned by their Canadian corporation. Because what happens is double taxation is one problem. But even before you get to double taxation, even before you get audited by the Canada Revenue Agency, the CRA, putting a USLC in your own name, your personal tax rate can go up to 53%. Right? So 53% tax rate for any profit that you earn. Much smarter to own the USLC by the Canadian corporation. And that avoids double taxation as well. The LLC is treated as a corporation in Canada. If it's owned by the Canadian company that you would own, then it all gets reported under the Canadian company. So it's fine for the US because in the US, you're not paying any income tax on it. In the Canadian side, on the Canadian side, it's all reported under the Canadian corporation. And that's fine for US, that's fine for Canada. And it also lowers your tax rate. So you're not paying 53% tax, you're paying 12.2%. I'm assuming you're in Ontario, but it's about 12 to 13%. Now getting to your question. How do you do the bookkeeping for it? So what you would do is, let's say you're using QuickBooks or your bookkeeper's using QuickBooks. You would set up QuickBooks under the Canadian company and link all bank accounts, the Canadian company's bank accounts and also the US LLC's bank account under the same QuickBooks account. Why? Because at the end of the year, when you do the corporate tax return for the Canadian company, you would include all the income and all the expenses of the US LLC as if it never existed. It's like literally passed through. So US LLC is just like a veil. Everything gets reported on the Canadian company side, and all the bookkeeping happens in one roof. Does that answer the question?
That makes perfect sense. And I think that's a very elegant solution to this issue. And I think most of our followers, of our listeners, can follow this train. Now, obviously, you're specialized on this for Shopify, for e-commerce sellers. Who's your perfect customer? What kind of brands do you work with?
Yeah, so normally we're working with, we're okay to take brands as small as they want, but usually where we see brands get real value from us is a brand that's doing about 50K in sales worldwide per month, all the way up to, for example, we've got one company that's doing 100 million a year, so about 10 million a month, right? We're something exciting that it just got signed yesterday. The gummy company Haribo, they're starting to work with us for the Canadian side. So that's obviously a huge feather in our cap that a global company, so probably going to be $1 billion company very soon. So anywhere from 50K all the way to 100 million a month.
Haribo is very well known. I'm from Germany, so very known brand.
Exactly.
Really, really good.
Exactly.
Walk me through the typical onboarding process when a new client comes to you. What steps are involved? How long does it take to get up and running?
Yeah, 100%. So first, there's obviously the boring stuff, the paperwork and the invoicing and all of that stuff. Once that's out of the way, we usually book an onboarding call 2 weeks after you start with us. So an onboarding call is where you meet my team. You probably, if you're 50K and above a month in sales, your initial call when you want to have a discovery call would be booked by me, would be with me. But then when you start, then the onboarding call would be with somebody in my team. So I would be there, my director of ops will be there, my corporate tax manager would be there. They would explain the scenario, next steps, and usually what they do is they set up a QuickBooks account for you. It's on our tab, so we're paying for it. They connect all your apps for Shopify. One app that we like to use a lot is A2X. It's basically an app that helps you. So it helps you connect your income from Shopify directly to your QuickBooks. What a lot of basic bookkeepers or non-e-commerce focused bookkeepers do is they take your payouts as your income. So when they're doing the bookkeeping, let's say you earn 100K in a month, you only got 80K as a payout because obviously there's fees, refunds, and all of that stuff. They're going to take that 80K as your income, and CRA, Canada Revenue Agency, is completely going to disallow that. I have audit letters on in my file where CRA has asked for income to be reported from the Shopify portal. They need a download from the Shopify portal from the reports to see that. So we make sure that that's then taken care of, because obviously the biggest thing for Shopify sellers is that they want the peace of mind of knowing that this is all taken care of, so we don't have to think about these things. So on the onboarding call, we set up all the apps, and then the team goes away. We're doing the monthly bookkeeping and sending, and every month you get sent a monthly profit and loss that shows you exactly how much you made, including everything done directly from the Shopify data, and so that you can take decisions with clarity, not by gut feeling.
I like this approach. I'm doing online business for a long time, and having someone on your side, an expert specifically when it comes to bookkeeping and to accounting and to taxes, who understands online business, e-commerce, specifically Shopify, that is so important because, as you said, a lot of experts out there, they don't have the specific knowledge, and then things can go wrong very, very quickly. I have experienced this on my own, so you want to make sure you have someone on the side who knows what they're talking about. How does your pricing structure work? How do you charge?
So before I get to the pricing, talking about the value of it. So the idea of SAL Accounting is to be a one-stop shop, right? So exactly what you're saying, that because the account the accountant your dad referred you or what have you doesn't really know about Shopify, just like you rightfully said. So we saw that gap in the market and nobody's filling that. So we realized that we're good with US taxes. We've been doing that. And I ran my own e-com store years ago. So I was like, let's bring that knowledge and the US tax knowledge and obviously Canadian tax knowledge and bring it all in one house so that it's a one-stop shop for Shopify sellers. The other thing is that as we talk with more and more sellers, and we've got dozens of brands that are working with us, you learn from one brand and then you apply it to the other. So for example, I can now have conversations with brands talking to them about your spending on Meta. Are you white labeling your spending? What metrics are you checking on Triple Whale? A regular accountant doesn't even know what Triple Whale is.
Right.
So about the pricing, the prices change depending on the team's capacity. But right now, I mean, in April 2026, it's roughly around it starts at the 700 per month per entity mark, where bookkeeping, US tax filing, Canadian tax filing, all is covered. This is in Canadian dollars. So if you've got just a Canadian company, that's probably price is going to start for a small store at about 700 a month. If you've got a US LLC and the Canadian company, then it's going to be not exactly double that, but somewhere sort of 80% more, something like that, 90% more. So let's say 1,200, 1,400 a month for an average small store.
Mm-hmm. I think that's money well spent because it takes so much of the nerves away and makes sure that you're working according to the IRS, to the Canadian Tax Revenue Service, and so on and so forth. And as I said, there might be fines involved if you don't do it right. So I would always bet being on the safe side there. Before our coffee break comes to an end, is there anything you want to share with our listeners that we haven't covered?
Yeah, I just want to add to the point where you said money well spent. I'll give you a small example. A few weeks ago, I signed on a seller. He's doing about 4 million a year, selling belts. When you were signing up with us, when we were initially mentioned the price of the Canadian car, he just had a Canadian company, and it was about 700 a month. And he was like, maybe I could, because obviously he's young, in his early 20s. He was kind of trying to see if there's a more cost-effective option, right? So 700 a month, he was still trying, like on the fence of it. I just brought up the fact that I was like, okay, so X% of your sales are to the US. Let's do a quick calculation. Oh, so if you open a US LLC and we handle all of that for you, you're saving like 2K a month, or 2.5K or 3K a month. He's like, forget 700 a month. Sign me up for the US LLC. And that price was like 1,600 a month. He's like, today, I'm going to sign up today, right? So when you put that put into perspective the value you're getting, it becomes peanuts in that sense. The thing I was going to say is that I'm obviously I understand that some sellers are not to that scale, and it might not be too much value for them to start with this right now. For that reason, I've put up videos on my YouTube channel talking about in detail, like some of the forms that I'm talking about with the 25,000 penalty. There's literally a YouTube video of me going through the entire form, right? So if you just go to the channel, check it out, you're getting free value without even having to pay $1.
Perfect. I will put the link to YouTube channel definitely in the show notes. Where else can people go and find more out about you?
Yeah, so it's salaccounting.ca. So SAL, 3 letters of my name, accounting.ca. And the channel, if anybody wants to know, is SAL, S-A-L, the CPA. SAL, the CPA on YouTube.
That's easy to remember. I will put the links
Yeah.
in the show notes and you will be just one
sure.
click away. So thanks so much. I think there were a lot of golden nuggets in there. If you're in Canada, if you're selling on Shopify, I would recommend to reach out to Salman to make sure that your taxes, your accounting are in order and you're not getting in trouble. Thanks so much for the time today.
Likewise. It's a pleasure speaking to you.